Good morning, everyone. Welcome to the market, where every day we discuss everything to do with the modern market, which is today the crypto market, the NFT market, and how to make some or a lot of money on the internet. Load up for discussion. We've got pretty bad news in the sense that Coinbase announced the data exploit and a $20 million ransom. We'll be getting into that. A lot of people reacted quite negatively to that on the timeline. Very unfortunate. We'll explain some of the details there. We've got hype on more positive news, up 7% after touching $27. Obviously, more positive if you bought some of the lows, like we spoke about at some point in the show over the last few weeks. And then finally, this is pretty big news. Again, on the kind of crypto social side, Infinex announced the biggest rewards pool ever so far for Kaito yappers, $6 million worth of you patrons. Are going to be available over the next few seasons. The top yapper from the stealth season earned $45,000. I was on that yapper board, pretty happy with that. We'll break down what you need to know there a little bit later in the show as well. Plus, we've also got the latest on price action and general market thoughts as we move into the weekend. I've got Legendary in the co-host seat with me today. Cannot wait to get into it as usual. But just a reminder, friends, no matter what we do say or think, nothing on the show is financial advice. The market is very, very risky. We do not know anything for sure. So please proceed with caution, exercise your own judgment, and just be responsible. Just be responsible, guys. We're going into the weekend. Be responsible. Legendary, it's Friday. It's the 16th of May. How you doing?
GM doing pretty well. Be responsible is fun, I guess. Is it? Is it the time to be responsible when there's so much stuff to gamble and play around with?
Yeah, I don't know. I was just going with it. I told you I'm not feeling very well today. My voice is altered. I'm just gonna say things. I get a bit loose when I'm sick on the show. Just gonna come up with phrases and just say whatever I really feel like. To the extent, I mean, we're always saying what we feel like, but I'm gonna be loose with the opinions and the phrasings that I come up with today. Is gonna be today, I think. You were a bit irresponsible yesterday as well, Legendary. Maybe, right? Is that we sharing that on the show?
We're sharing that on the show. That was said in a private chat before the show. I've been to the club yesterday. I feel like for the first time in 8 years, I hit a club, and it was so weird on the one hand and so entertaining on the other hand. And it kind of tells me how old I start to feel if just going to a club at night on a Thursday night is something worthy to talk about because it happens maybe like twice a decade or so.
2 times a decade. Yeah, I like it. I mean, if you tell me I had to if you tell me I had to go routinely, I would hate it. But now the prospect of going, I think it would be entertaining just because it would be like just the very fact that you're there is entertaining. Like it would be a funny thing to participate in because I would feel so out of place and I'd be laughing at myself for being in that situation.
Exactly how I felt yesterday.
There we go. Okay, so a little bit irresponsible IRL, and you're thinking maybe a little bit irresponsible in the trading books as well. Is that what you're thinking?
Yeah, I mean, it's time to have a bit of fun on the trading books.
Yeah.
But I got, by the way, like short side story. I got so paranoid about stuff. So we asked someone to take a picture of us yesterday at the club. And I was like paranoid because they wanted to use my phone because I have like, the best camera, quote unquote. And I was like, are they accessing my wallet? Why does it take so long? Are they on my mobile wallet? What are they actually doing?
Yeah,
I just hate giving my phone to someone else.
I agree. No phones should, like, everyone should be in charge of their own phone. And in addition to that, no one cares about the camera quality. Like every camera is decent. Like someone's got a Samsung something versus an iPhone, whatever. It's like they're all the same. I can't tell the difference between any of them. There's no need to only use one phone because they've got the best camera. That's my take. And the other thing that people do, I don't know if people still do this. Maybe it's more in a family setting. People who like take a photo with one camera and then someone say, "Oh, use this one as well," because they also want the photo. That needs to be banned. You just need to share the photo. Take the photo once and share it, right? Am I wrong there?
No, absolutely agree. And if we are already on this train to complain about people and phones, one last rant. I hate people when you show them something on your phone and instead of looking at the screen, they grab your phone and take it out of your hand. This is so irritating.
Why are they touching the phone? It's just to look at.
Yeah.
Okay, yeah, that's good. It's a good way to start the show. as I said, not feeling well today. We're just going to let rip with all the things that we dislike about the market, people, and anything else going on. So it's going to be a good one as we bring in the weekend in. We're also going to be talking some portfolio thoughts because I tweeted a couple of days ago that privately, me and Legendary have said, we need to start bringing our portfolio chats back. It's something that we did a lot during the crazy times. And then we kind of put it on ice for a little bit during this chop period before these big moves. So we're going to bring it back. So we'll do like maybe a mini version of that. I don't know all the, we're obviously going to do that separately as well. We'll do a mini version of that so people can get a sense of, I don't know, just some of our more, I don't know, just some of our deeper thoughts, maybe as we think through like some of the problems maybe in our portfolios. Right, let's get into it. As you just get you up to speed with everything as normal. Funky, your hand is raised now. I suspect you have some kind of commentary on Legendary's promiscuity.
We're still on just you letting it rip. I'm like in the kitchen making eggs. I woke up really late and I'm just dying over here listening to you guys. Like the way you're starting the show. And I agreed so much with everything you were saying about grabbing the phone and everything else. But
there we go.
Man, this is gonna be a great show.
All right, let's do it. I guess we got to do it. We like we always do, starting with the majors. Bitcoin is up just a couple of percent to $103,000. Did dip a little bit, I think down to 101 yesterday. ETH is up 3% to 2.6. XRP is down 1% to $2.40. BNB is up 1%. Solana is up 2% to $173. Just always checking with Sui and Hype because we like to do that now as well. Sui's up almost 6%, almost back to $4, and Hyperliquid is up 9% to 26.8. It was almost at 27, or it did go past 27 not long ago. We'll be just talking a little bit more about Hype a little bit later in the show as well. It's been one of our big picks for this part of the cycle. Getting into the meme coin side of things, we have Dogecoin up a couple of percent to 22 cents. Pepe's flat, more or less. Trump's up 3, Whiff's up 1%, Pengu's up 1%. Not a huge amount going on here, to be honest. Like Mog's up 10, to be fair. Ket on AVAX is up 13 as well. Toshi on base is up 11. Giga's up 12. Launchcoin is down 20. I wouldn't really even put that in the meme coin category, to be honest. It's kind of become its own category, I think, by itself. But it's down 20% to 210 mil market cap. Nothing else to report there, I don't think. Getting into the headlines themselves to recap for you all. We've got Coinbase announcing the data exploit and a $20 million ransom that has been requested. They instead issued a $20 million reward to try to help catch the exploiters. A lot of people are really super annoyed about this. The KYC requirements at these kind of exchanges are getting really, really extensive and is genuinely putting people in harm's way. We've seen numerous times, particularly in France, maybe Europe more broadly, but also worldwide, just people getting people's safety being compromised with these types of leaks, or at least it could be part of it, right? You want to have a certain amount of security with this stuff. So we'll dive in there, get into some of the details. We'll try to figure out how bad this was. Legendary will take us through that in a bit. We'll also be talking about Hype up 7, or I think it's 9% now, to almost $27, 3x of the $9 lows, which is pretty insane if you think about it, right? And then finally, Infinex announced their biggest rewards pool so far for yappers, $6 million worth of you patrons, which is this kind of derivative token they're going to create attached to the value of the patron NFTs. So that's the reward for the next 3 seasons of yapping. It's the biggest reward that they've ever done. As a disclosure, I'm an investor in the patron NFTs, spoken about them a reasonable amount on the timeline. I was included in that. The top yapper from this stealth season had $45,000. Like, this is going to get people's attention in a big way. So we'll talk about that towards the end of the show as well. Some notable price action. As I said, Launchcoin's down 20% to 200 mil or so. Department of Government Efficiency, that meme, which I actually lost a ton of money on. This was one of the ones I lost a truckload of money. After making a truckload of money, I lost a truckload of money on this in the previous meme season. That's up 64% to 40 mil. And the Infinex patron NFTs are up 3% to to a dollar high of $6,700. That's 2.59 ETH. The buy-in roughly for NFT, like if you participated in that patron raise, you either bought in at $1,500, $3,000, or $5,000. If you bought in at $5,000, you got your NFTs straight away. If you bought in at $3,000, they vested over a 12-month period, depending on how many you bought. And if you bought in at 1,500, you were locked up for a whole year. So these were bought in September. So it's a clean 4x as things stand for the people who are locked up, but they're locked up until September. That's why I went for the $3,000 option. So I got some optionality. So I think I get a patron like every 2 or 3 months because I bought a bunch at 3,000. So I'm up nicely there. De-risked a couple, and got more to come. So I'm pretty happy there. Is there anything we need to know on the NFT side, Legendary?
Honestly, there's not too much going on for the majors. Basically, everything is flat. As we said yesterday, the majors like the Pudgies are still down over the week, down 13% for the Pudgies, down 8% for the Apes. But over the last 24 hours, nothing major to report on. You mentioned the important part with the Infinex patrons being up. The only other notable collection, again, the On-Chain Heroes Genesis rings have had a nice movement over the last 24 hours, up 30% and now above 1 ETH again.
Yes, good point. Scarly is pretty much crushing it with the OCH stuff. And I've got to say, like, I think just the general abstract gaming ecosystem, the ingredients I think are there for abstract to do well in the gaming side because they've got all those young streamers. Like they've got all the young, cool people who are like streaming, playing the games. I think they've just got a beautiful flywheel there with like the games getting created, the people there to play them, and the streamers there to stream about them. So not only do you have On-Chain Heroes, you've got Gigaverse by our friend Dith, who is crushing it. And then you've also got Monsters coming out by our friend Moody. You're an advisor, I'm an investor, and like the demand there for these monster, what are they? Monster vials, the NFTs coming. Seems like crazy demand there as well. So very, very interesting kind of for Web3 gaming. It just feels like there's a nice set of momentum, at least in that direction. Okay, that's the NFT stuff. All kinds of stuff going on in the rest of the roundup to get you up to speed. Ledge, just interrupt me here. If there's anything that you want to interrupt me on, find interesting. SEC, mainly because I'm losing my voice. So SEC is investigating if Coinbase inflated its user metrics before 2021 IPO. State of Wisconsin Investment Board sells $321 million of Bitcoin. So they're no longer holding Bitcoin. It's kind of annoying. We kind of celebrated when they did hold it or when they bought it. Now it looks like they've dumped it. Brazil's first Bitcoin treasury. Ledge, can you just read the rest for me, please?
Yeah, Melius buys 274.5 BTC. Share price did double after the first BTC purchase, which happened back in March. Next piece of news, MoonPay and MasterCard, they partner up to enable stablecoin payments with new stablecoin-powered virtual MasterCards, something I find pretty cool. In terms of movement labs, there's been a couple more leaks and documents that reveal early insiders offered access up to 10% of the token supply that was reported by CoinDesk. Some more news from around the space. FTX set to distribute more than $5 billion in second distribution to eligible creditors within 1 to 3 business days from May 30th. Web3 investment firm Hivemind announces Lightyear, a marketplace to bring liquidity and efficiency to the NFT market. Frank Digots, that definitely took a lot of attention on the timeline. His wallet and laptop allegedly have been compromised. 16 Digots have been sold at floor. From the social side of crypto, Novastro announces an additional $30K per month in rewards split between the top 10 global and Chinese yappers each week. Kaito updates the website with biggest changes to the earn section, divided now in the categories yap, refer, stake, trade, and use. And last but not least, Maple Stories NXPC token, which we reported on yesterday, claim is live for the top 2,000 yappers and top 500 voters, which is something that I did not know. But I remember full stacking my entire votes, hundreds of thousands of votes into that. So I should check for that because I want to claim those tokens. B, you are on mute.
I think I did the same thing at one point in time. So yeah, I've added this social crypto aspect to the snapshot because I think there's just a beautiful momentum here for Kaito.
Mhm.
The number of partners. Look, and I know what the criticism is, right? The criticism is that there are arguably so many partners. A lot of them maybe are not, some are higher quality than others. Like, yeah, that's the same as everything. Of course, there are very few like completely top-notch, high-quality projects. Some are decent, some are maybe less so. But the game is the same as anything. I think like you've got to discern between the quality and the not quality. And MapleStory, for example, is clearly one of the great ones. I don't think I really appreciated the full story behind it until you told me about it yesterday, Legendary. But as we mentioned yesterday, it came out at 3 bill FDV. So it's a super successful launch. And I'm going to keep reporting on this stuff because there are things that there's very nuanced ways that people are starting to reward people. Remember, we spoke about this yesterday and how I compared it to airdrop farming, where phase 0 of airdrop farming it wasn't even farming. It was just rewarding your users. Phase 0 was you used our protocol. You did this, you did these various interactions with our protocol. Here's a bunch of our tokens to say thank you. Like that was phase 0. Phase 0 of yapping was you just go out and yap about NFTs and crypto. You don't really know what's going on. Thank you for doing that. Here's a bunch of Kaito tokens. Then phase 2 of airdrop farming was, okay, now we've got a point system. We've got a point system and we're going to track you. Then phase 3 is even right. We've got a point system and maybe you've got to go and do some quests and you've got to like and retweet a bunch of these posts. And the more that you do on the social side, as you basically put these people to work for you in order to earn their airdrop. So this is not even an airdrop anymore. This is just like you are working for the protocol. So I want to make a clear distinction between that. Phase 0 wasn't airdrop farming because you just got tokens. Phase 1, there was a point system, so maybe that was airdrop farming. The next phase is not even airdrop farming either. You're actually just working. And at that point in time, you need to decide, is this worth your time? Because you are actually drafting tweets, figuring out like how to best leverage this content in order to do things. So you're basically you become a worker. So I think we're in that phase for Kaito now where people have got more sophisticated. It's not as simple as just mentioning. I remember some people were just like listing all the names of protocols in tweets. Like, I am bullish on Mega ETH, Eigenlayer, MapleStory, Infinex, and just like doing like a 20 thing and thinking that might log on the records. But what Infinex, for example, today has said, and we'll talk about this more later, is like, look, we are not like there's a third aspect to our review, and it's a manual review. So you can't do that kind of slop anymore. You're gonna have to be more thoughtful. So we're in that process where this whole like social reward system is maturing, and we're gonna keep reporting on it. So yes, going back to the MapleStory thing, the yappers got rewarded, but it was also the voters. So let's see. I wanted to report on that. I was also a voter. Ledge was a voter. Go and see what you managed to get, and I'm sure there'll be other interesting nuanced ways that protocols want to try to reward people. We'll stay on top of it because I think that's very interesting development in our space. Anything else any comments there, Ledge? Because we're going to talk about the Infinex stuff more later, so I don't know if you want to go there or anywhere else around the market here before we get into the main stuff.
I very much agree with you in terms of how airdrops have changed, but it is more work now, essentially, yes. But it's also a lower risk because previously you basically had to deploy capital on protocols or L2s you were not overly familiar with and just hope that there's no smart contract exploit going on that will take your money away. You don't have this capital downside risk. You might have a sort of reputational risk if there's a weird protocol which is rugging around on Kaito, but I do think they filter a lot. So I would say this risk is considerably lower than relatively farming an airdrop in the 2021 era and just falling victim to whatever sort of exploit is going on. Yes, I do agree with you that there's way more protocols and projects on Kaito, and it's difficult to keep track. The flip side, the advantage of that is that as a smaller creator, there's so many niches to pick from and talk about projects that are not basically on everyone's mind, and be able to establish a dominant mindshare there and profit beautifully from that. Even I know that we're going to speak about the Infinex stuff later, or it might actually make sense to move that a bit early into the discussion. If you look at some of the people in the top 3, even AI who's cleared 19K worth of the Infinex airdrop, has 6K followers on X. Not a mega big KOL by any means, and it's definitely benefiting from that. So I think that having this plethora of protocols means a big advantage for smaller to medium-sized creators who can then focus on that and can actually attack a new community, because there is communities around protocols like Sofa and Infinex and whatever the names are, and you will just be able to beautifully grow your account by that as well, by just focusing on those projects instead of trying to dominate the leaderboard, which is the most competitive one.
I agree. Okay, let's do it this way around. We're already on the topic, so let's do Infinex now. Then we'll do the Coinbase stuff, and we'll actually do the portfolio conversation towards the end. Like, we'll close out on the portfolio thoughts, and we'll kind of wrap that in with hype, I think, because that's part of our conversation. So I'd actually wrote your name. I thought I was going to do this, but are you prepped for this, Ledge, or do you want me to do it? You got it?
Happy if you can do it.
Okay. Right. So, as we said, Infinex has launched the biggest pool for yappers around. The core details that you need to know is that it's $6 million worth, $6 million worth of U patrons. U patrons are like a fractionalized version of their patron NFTs. They haven't like gone into a full amount of detail on like where exactly that's coming from, but when someone asked Whale on his tweet, he was asking like, what are you patrons? The thing that people don't know, because people might not be super familiar with the raise and how it was done, is that Infinex has 100,000 NFTs of the patron NFT. One of them is trading at 2.58 ETH. If you like extrapolate that out, it's one of the NFTs with the highest market cap in the whole crypto space. Because obviously people are valuing it not only as just some random NFT that gets you some use case on the app, it's being valued, as if there's going to be a token, and is it going to trade at like $500 million or $1 billion or whatever. So that's the thing you got in mind. And just, I realize I haven't even explained what Infinex is. If people don't know, it's like this all-in-one on-chain version of Binance, where you can start doing everything within this particular website. You can switch between, they call it switching between different chains. So you can go from Solana to ETH to a meme coin on Bcheque and everything like that. And then you can also have this earn section, so you can do like some DeFi stuff, but all within the app instead of having to open 100 tabs. So it's a pretty interesting problem that they're trying to fix. I think they're doing a good job with it so far, and incredibly well funded, because they raised something like 68 million. I'm going to check my tweet from September in a second just to double check that. But they raised a ton of money basically, and they're super well funded for this. In terms of the specifics of this deal, then what they have said is that there's going to be 1% of the supply will be distributed over 4 seasons. This is 1% of the U patron supply. Season 0, which is complete, which Legendary mentioned, where the top person got $45,000 worth, second person got 20 something dollars worth, next person got whatever dollars worth. $600,000 worth will be distributed, and the claim will be next week. Season 1 is going to be 15%. That's going to be $900,000 worth at current prices. Season 2, 25% at $1.5 million worth. Season 3, 30% at $1.8 million worth. And the Kaito ecosystem holders will get 20%. That's $1.2 million worth. Where do the U patrons come from? I think, I don't know this for sure. My suspicion is that, you know, there's 100,000 NFTs, 50% were available to be sold to the public. So that was everyone could have bought 50%. All that 50% wasn't taken. I think like 44% was taken in the end, which means the rest is all held by the company. So I think Infinex holds between 50 to 57% of these NFTs that are just clearly locked up, right? That's just for them to either hold themselves as kind of exposure to themselves, and, you know, in the same way that people hold back a certain amount of their coins for the team, that's the equivalent of them doing that. Or they can use that for initiatives like this. So I suspect those NFTs will get fractionalized in some way in order to create these more liquid tokens. So that's my thinking there. In order to participate, you need to connect your X to Infinex 2, and then you can track how you're doing here. I just think this is a colossal opportunity. As I said already, disclosure, I'm an Infinex investor, and as a patron NFT investor, I de-risked the ones that I had so far, because I said mine kind of what's the word, they vest over the 12 months, and I've got 3 more to come, so I'm super happy with that. And then maybe some final details. I don't know if we want to share from like the general thesis ledge. I've got this tweet, which was my original thesis, which I wrote back in September. It was like the Infinex $65 million raise. Why I allocated this much. I'm just looking through if there's anything of interest here. It was backed by a lot of people. The people that I quoted here, although there were many more people. Luca Netz invested, Jason Yanowitz, founder of Blockworks, Mert on the Solana side, G Money, the founder of Bcheque is the founder of Sky, which is MakerDAO. I think Vitalik was in as well. At least look at this photo. You know, this was actually part of my thesis, Ledge. Go to the photo. We're showing this on screen. Legit part of my thesis that I shared in September was a photo. In the photo, you can see. Do you know who all these people are, Ledge? You do, surely.
No, absolutely not. I obviously recognize Vitalik, but I'm horrible with recognizing people by their actual faces and not PFPs.
Okay, so this is my actual investment thesis. So you obviously have Vitalik here. So Kane's on the left. Kane's the founder of Infinex. You've got Vitalik like in the middle to the right. On the left of Vitalik is Guy, who's the founder of Athena, which is, you know, I'm super bullish on. I think they've done an amazing job. In the front right, you've got Stanley from Aave, you know, Titanic ETH protocol. Behind you've got Taiki, the YouTuber, who's like pretty successful. Right, you've got Bing from Mega ETH, who we've had on the show, which is like, you know, the next biggest thing on ETH, arguably. And then on the left, you've got Jeff, who's from Hyperliquid. It's like, that's a sick group. If that's the group chat, I'm investing in that group chat, you know?
It's actually seriously impressive that you recognize all those people. Like when you say the names, I see the PFPs in front of my inner eye, but I would have no idea.
I think that's but I swear to God, this is genuine. It was genuinely part of the investment thesis. Like, you see those people together, and you just think like, okay, I'm by no means saying that you see a photo and then you like chuck loads of money into anything.
I mean, you're saying exactly that, though.
I'm saying it's a factor. I'm saying I realized that was what I was saying for a second, and I'm just backtracking a little bit to say it's part of the more general thesis. But it's kind of interesting that you didn't recognize all the people, and it shows how valuable I think it is to recognize people, because then you know, like, okay, who's connecting with who, who's in the same conversations with who. It's just I like observing that. I also watch a lot of people like who comment to who on Twitter. I've definitely made investment decisions off that as well. So like the Hyperliquid unit stuff that I talk about is because I've figured that out by like who comments on whose tweets, and it's purely like observation in that respect as well. So interesting side note there. But anyway, so that's the Infinex set of thinking. I think we've covered anything. If anyone says I haven't covered anything that they need to know, drop us a comment, and we'll respond. Ledge, any comments, questions, thoughts, reactions? I think there's a lot of money, right? And the biggest type of reward pool we've seen so far. Also, maybe just a final point. Also, maybe slightly more thoughtfully done than other people. Their whole idea was, you know, as part of the process here, it's not just going to be mindshare. there's the third part is a manual review. So, as I said, it's like an evolution to the process now. What are your thoughts and what are your reactions?
I think just yesterday we had the headline biggest Kaito rewards program for what was it, Sol protocol, that DeFi protocol, which is giving away 1.5%. Today we're speaking about Infinex. Obviously Infinex, like it, great protocol, nothing to add. You explained it beautifully. But on a more generally abstracted thought, it's fascinating how much we are talking about Kaito. Like I feel like there's no week where there's not a mention of Kaito in the snapshot, whether it's in main news or in the Web3 Roundup, at least coming up twice, because there's like so much going on. And basically everything of relevance that is launching, is wanting attention, is pre-TG, is post-TG, doesn't matter, has some sort of link to Kaito now. And it's incredibly impressive, to be honest, to just see that Kaito started yapping at the end of last year at some point. I don't know, was it September, October, November? And now it's 6 to 7, maybe 8 months later. And this has not existed before in this shape, in this form. And now all major protocols want to be on Kaito, want to have access to the social graph, want to set up a rewards earning and farming campaign. And just if you think about like how fast Kaito established itself as an app, whereas a protocol that so many other protocols, L2s, et cetera, want to use and want to partner up with, that to me is very, very fascinating, because that's even fast for crypto. I know that there's like not capital involved in the same sense, like with the DeFi protocol, where say like Aave is that popular because it's been around for years and years and years and has been withstanding the test of time of attacks and breaches. And this is, quote unquote, just about the data, not directly. Capital is obviously indirectly involved and is very relevant to the TGE valuations, et cetera, but it's not a protocol where you put in your money. But nonetheless, I find it extremely impressive how fast Kaito has evolved to be just a staple for many protocols to use.
Yeah, I think it's pretty good. I mean, just to the counterpoint is only that I have spoken to a couple, one particularly huge one, that don't like it. They think at least the way that it was being run, not the way that it was being run, but the output that it was creating was not good. And because there was that little period of time where people were complaining that the output was creating all this slop, people were farming it in a really annoying way, and therefore, like, is that the type of content you want to incentivize? I feel like they've reacted quite quickly to that, and maybe they've adjusted it a bit. Maybe a more personal take is that I do find it kind of annoying, like the proportion of yap farming tweets are really, really high. And maybe just like a personal observation might be helpful to people. I've created like this little list recently of people who I need to follow, as in people who I like want to interact with more. And look, I get it. I get that the farming aspect is important, and it's cool that you get to earn from this thing. And this is the final thing I want to say on this, because we've got to get to the other crypto news. But like on this list of like side people that I've created that are like, okay, these are the really important people that I want to be interacting with routinely. I'm not the best at doing it because I'm like so busy at the moment. None of them are farming stuff. And I think like if you give up your voice entirely, you might get some of the numbers and you might get some of the money in a shorter form in the short term, but you definitely sacrifice some of the reputation in order for that. So I guess my point is to just be thoughtful about it, and try to do it in a thoughtful way, because I'm just watching my own behavior, and I've noticed that I created this group, and then I reflected on the group as like, none of these people farm stuff. Like, their voice is their voice. They're sharing their real opinions. And that is what we're here for on Twitter in general. The people who do best manage to find their own like personal touch and personal voice the best. And then you can integrate stuff into that. I think that's probably the best way to think about it. But look, just sharing a bit of an alternative perspective there as well. People can take it or leave it, go for the money. We all do in some ways, so no judgment. Getting into the next headline, Ledge. I think this is the way around we're going to do it. Let's get into Coinbase because I know it happened, but I want to know the details from you here. I feel like it's really bad. And then let's do the portfolio chat. We'll wrap hype into it as well. We've got 20 minutes left. Perfect timing. Let's do it.
Yeah, you are right. It is indeed bad news. Coinbase has faced a data leak and is also forecasting a hit of $180 million to $400 million as a result of this cyber attack that has breached account data. Coinbase itself say it is a small subset of its customers that have been affected. So what actually had happened is that the company received a mail a couple days ago on May 11th by an actor claiming that they have information about certain customer accounts as well as internal documents. The data includes names, addresses, emails, passports. So all of the KYC data was stolen. Hackers, it's the strong point that Coinbase have been making, did not get access to login credentials or passwords. And in a video statement by the CEO, Brian Armstrong, he also have added that Coinbase is ready to reimburse customers who basically would be socially engineered as a result of that data breach and would lose money as a result of that. The hacker basically has obtained this information apparently from overseas support agents by Coinbase, apparently has bribed them to get access to this information and initially wanted to have 20 million by Coinbase to not reveal the data. This is not something that Coinbase reacted to in this way. The company said that they will set up a $20 million rewards program to actually find that malicious actor instead, and they will not give in to that blackmailing attempt. And then another news also from the Coinbase side is, you reported on that on the snapshot as well, is that there is now an investigation going on if the user numbers that Coinbase has reported are actually accurate. So basically, we had a beautiful start of the week with Coinbase being listed in the S&P 500, and now two negative news, which also have obviously impacted the share price, down 7.5% to $244. It's been massive commentary going on the timeline with regards to the leaked data and how, yes, one part of the risk is being socially engineered by that, but the other and probably more threatening point is that ultimately Coinbase has created basically a list of worthwhile targets to try to kidnap, rob, break into the houses, whatever, because all of the data is available to do so. And there's been a lot of criticism towards the need for KYC, extensive KYC requirements. My personal opinion on that is that this is not the right way to approach it. I don't think that KYC is the issue. The issue clearly is how Coinbase has been handling the data. And there's been a couple of prominent voices on the timeline who said, look, if you do KYC for an exchange, then there's absolutely no way that these files are stored on a server that is online, that's to be stored offline, or that's to be stored in an air-gapped server. I think Adam Cochrane reported on that as well. That's how he did when he was working with an exchange, that's the way to approach that. So if you have to handle sensitive KYC data as a requirement to, well, know your customers, as the name is indicating, then I don't think that the criticism is towards the KYC requirements, but more so to how Coinbase has been handling data, because such a breach should not have happened in the first place. B, you are on mute.
Okay, great summary. A couple of comments from YouTube. Overarch said they asked for everything, including address. They can't keep that info safe. That is unacceptable. Another one, moving their customer support bases immediately is a good reaction. I think I agree with you, Ledge, that I know people hate KYC. It is annoying. In fact, it's definitely annoying in different ways, and it can get more and more pervasive, like intrusive, sorry, is the word. It can get more and more intrusive. I don't think it's realistic, and this is just a pragmatic view. I don't think it's realistic to do away with KYC. It's not going to go away from the regulatory perspective. So taking that out of the equation because it's not going to go away, like it's just not going to go away. And you can take personal decisions knowing that, but in that world where it's not going to go away, as you say, I think the way that the data is treated is probably the best way to mitigate this kind of stuff. I'm actually not sure on Overarch's comment that the customer support base moving it is a good reaction. I'm not sure it should matter where it is, right? Like, are they admitting that one region or wherever their customer support is based at the moment, and I don't know the details of where that is, are they saying that that's like not good enough? They're going to move it to a more secure place? Like, why do they have places where it's less secure than other geographic places? NBB in the comments says they should have taken more ownership of the hack. It was a compromise of their customer support individuals before KYC. Seems like they need to beef up background checks on employees. Yeah, I mean, I think that's fair. I want to know what customer support individuals they are, because I feel like you can't get a hold of a customer support person. So how can they be hacked from the customer support side when you can't get any customer support when you try to talk to these exchange people? Ledge, any reflections there?
Yeah, I think even more strongly, no matter the geographical location, a low-level customer support should not have access to that information, and not to such an extent that
Yes, agree.
I don't know if we're talking like hundreds of thousands or 10,000s of customers being leaked in this hack, but that has to be handled in a way where you have to move very, very far up the organizational hierarchy for someone to actually have a more encompassing access to a larger set of customer data. But also very curious to hear Funky's thoughts on that, who has his hand up. Funky, what's your take on our conversation?
I'm gonna give you a very contrarian take on this. I think this is much ado about nothing, and here's why. We have existed in Web 2 now for 30 years. There have been so many data breaches. It is insane. I constantly get mails from healthcare databases like, oops, sorry, all your shit's out there. I think we go up in arms about it because we prize pseudonymity in our industry. I'm a Coinbase user. I already was much of my data was released in the Ledger thing. You guys remember? You've been around long enough to remember when Ledger got hacked and everybody's email addresses and stuff like that had been given out to Ledger. So I think that, to B's point, KYC is never going to go away. It's only going to increase, and as we get regulatory clarity around this industry, should there be greater safeguards taken to protect said data? Absolutely. But I think when you look at the way that Ledger had such a tremendous black eye at that time, back in 21, I think, when that Ledger hack happened, people thought Ledger's never going to recover from this. Here we are several years later. No one ever thinks about it. Ledger is still a dominant, if not the dominant, hardware solution provider in the industry. I think Coinbase has such a commanding lead especially in the US, as a trusted sort of source. I think it's going to blow over. It sucks. I'm not saying it's great, right? But like, as someone who uses Coinbase almost exclusively at this point, if my data was out there, I'm already thinking, well, my data's already out there. So I'm not like up in arms about it. I think they will suffer a temporary hit to the stock price. I think all these things are going to happen. But I think just in the big picture, on a longer time horizon, this will be water under the bridge within 6 months at most.
I agree that it will be water under the bridge. However, to me, the big difference is the proximity to the money layer, basically. Yes, my data has been leaked on the internet as well, and you can probably find a former address where I used to live at because that was leaked a couple of years ago, et cetera, et cetera. But if you get closer to the money layer and like, oh, this person's data has been leaked and this is roughly the amount of money that they have, and with all the kidnappings that we've seen in France, in particular over the last couple of weeks, and just with the fact how easy it is to steal crypto, like if Bcheque's data gets leaked and we find out that he owns a shit ton of real estate in London, it's still hard to go to his house and try to get him to transfer the deed into my name. It's way easier to steal crypto. And I feel like this is why people react so very, very sensitively to that, because it's just super easy to steal someone's crypto with just brute force and violence.
No, that very fair point, right? And maybe I'm sort of underselling that aspect of it. So I think that there's something to be said there. But as someone who, in the grand scheme of things, myself, see myself as sort of like a retail pleb who no one's ever going to bother me for my crypto, maybe that's probably why I'm being so glib about it. And maybe that's the wrong take because, to your point, people who have significant wealth at stake, obviously they could be induced with physical harm and stuff like that.
Yes, it's a. I see your point in a way. A lot of people's data is already out there. I think the point about the proximity of the money, which is the point what English was making in the YouTube comments as well, is pretty real. And so I mean, I don't know what the perfect solution is here. I think people need to kind of take their own precautions. And I guess once you're in crypto, like, do you just spread it out and start to move your stuff away from your centralized exchanges and, kind of set yourself up for a world where you'd have to use them a lot less? That would be my instinct. But I guess that's up for people to decide what's the best way to go about it, because as other people have noted in the comments, it's not just like our data doesn't just get leaked. In crypto, it gets leaked from all different directions. But yeah, the more financial information people have, obviously, the more dangerous it gets, I think, especially in this industry. So, right, good stuff. Well, bad stuff, but let's move on anyway, because we want to have an important conversation on portfolio construction and hype. We're going to connect these two headlines together. The headline was that hype is up 7% after touching $27. It's now a 3x off the $9 lows. It's outperforming other majors today, which are largely flat. And it's been one of the ones we've been talking about a lot. It's been one of the ones I've personally been clipping into a reasonable amount. I just want to tie it into like a general conversation on our portfolios, because we're kind of entering into a space in the market now where we'd not checked out, but we'd definitely taken a bit of a timeout after the mania in January and February. And in that period of time, to provide some personal insight, Legendary and I were like having routine hour to 2 hour long calls, sometimes longer, privately, on just like, what are we doing? How are we constructing this stuff? How are we doing this stuff? And then in the last couple of months, we haven't had to do that. Like, we just time out, no need, no specific things getting done. We've noticed that ourselves, we're like, right, we feel like we need to bring those conversations back. We're going to be having one later today or tomorrow. And thought maybe do like a little preview of that, in the sense that try and share some of that insight of like what we kind of work through when we do that. I thought, I mean, we've only got 6-7 minutes of the show today, but the question I was thinking we could answer, like, what are the problems we're working through in our portfolios? What are the key questions we're thinking about? And how does hype, linking it to the hype news, like, is that related to it, or is there anything else? Where do you want to take this?
Yeah, absolutely. Maybe I can just go top to bottom for my own portfolio as well. So the one thing that I've been spending a lot of time on is thinking where I want to put both my stable coins as well as my BTC holdings to work. And the question is basically yield versus airdrop. So I can farm my 15% in yield on multiple different places, on stables on the one hand. On the other hand, I can take stables, I can take BTC to liquidity pools on Hyperliquid. I can go for the unit airdrop and then basically try to find out what has the higher potential for my portfolio. And I'm definitely very much inclined to increase my Hyperliquid exposure more, still to a sensible level. Again, I think the thing we spoke about is the smart contract risk, all those different attack vectors. So ultimately, if something goes wrong, I still want to be in a good position. That is, I would say, one of the headline thoughts, because I'm still not comfortable to put all of my stables and all of my like cold BTC to work. But I do want to have a solid amount of that, whether that's probably, I would say, 20 to 30, maybe 35% of stables and BTC holdings working. That is the headline level thought. And the other part that I'm thinking is in terms of narratives. Where are we going next? Yes, we have internet capital markets, we have AI coming back. And we had this one conversation on the show probably months ago. And you brought it up because you had this post by Andrew Kang, who was like sharing about his thoughts and visions on human robotics and how to invest in that. And a lot of those deals obviously were private deals, very little publicly traded companies available on that. And this is where I've been spending some time as well, to just see which companies, which projects might have to do something with robotics, because I could see this becoming an interesting narrative for 2025. I think the key takeaway for me, and I'm going to pause, from the AI season is, and it's the same with NFTs. Like, NFTs were meant to change the world. AI tokens, AI will and is changing the world, but AI tokens were meant to change the world. And we had this like massive amount of excitement and tokens going up. And I think if we are to see a robotics season, and just given how difficult it is to break into that industry and how much in resources and also dollars it takes to actually build a sensible product there, it's going to be a lot of like empty promises there. So definitely also important to take profits on that if that bubble were to actually heat up. But this is where I am spending time on to like try to anticipate what could
On
be
the research side, yeah.
what could be some narratives in 2025, and robotics definitely caught my eye.
I like that idea. I like that idea a lot. For me, the thing that I'm thinking about quite a lot actually is just sizing. Like, how do I size these things? I'm thinking about two things. Two things are getting me through. Well, one problem I'm having, and then one reminder. And I think these are like a nice way to close the show. And like a problem and then a reminder. The problem is how to size stuff. Like, I feel like that's still how I'm developing as an investor. For example, with the angel checks we were writing, I was putting more and more actually at some point in time into the mania. And actually, it should have been the other way around. Like, you go bigger earlier and then you take stuff off later. And something like hype, which we've been talking about for a long period of time. And I'm sure this happens all the time, right? And in the end, it's fine. Like, I'm up a nice amount. But for my reflection was, for the level of conviction that I had in it when I was speaking about it on the show and saying routinely, like, oh, it's better to buy at $12 than 25 or whatever like that, I did not size it at all appropriately. Like, I put a reasonable amount, but I should have been putting, if you have that much conviction in something, you need to be going oversized, not like a reasonable amount. You need to be going oversized to feel actually a little bit uncomfortable, I think, in those positions when you are more confident. So I think that's like a learning that I'm still figuring out. I think we've had interesting conversations around that before on percentages. It's like to start to think in terms of percentages, even when you're like trying to get into a meme coin, like rather than if it's $100 or $1,000, like not getting too caught up about that number, more thinking about the percentage of a portfolio or percentage of a stable coin stack that you want to play with. So like, that's one thing. I'd be curious for your reflection on that in a sec. I know we're running out of time, but the second reminder to myself is that I was listening to the 1000X podcast, which is a good, like, pure traders one. I'm learning a lot from that as like a trader one. And I do trade as well as invest. I think I'm kind of in between those, probably lean more towards the investing side. But they brought up this great analogy, which I've actually heard before, which is have you heard the tennis analogy? It's not even an analogy, but it's just like Roger Federer's and the number of points versus the number of matches he's won. Have you heard that, Ledge?
I haven't.
So it's something like, I'm going to make up the numbers, right? Because whoever actually remembers these quotes perfectly, but it's something like he's obviously like the greatest, or one of the greatest tennis players of all time, won like a huge number of majors, like won 80% of his matches, 86% of his matches or something like that. And it's like, yeah, but what was the percentage of points that he won? And it's something insane. It's like 56% of points. Because in tennis, if you think about it, like you could foreseeably lose a lot of the points in a game and still win that game. I know, Ledge, you're not like a sports person. I don't know. This is just like,
so I do understand this. This
okay,
is one
you like tennis.
it's not over my head.
Right, you like the higher class sports. So yeah, like so you can win the game by whilst losing a lot of the points. So even when you make plays that don't play out, and actually, the last week has been pretty insane as like a good run. I think we spoke about like some of the things popping up on Abstract, some of the things on Sol heating up as well. So okay, times are good, so that's not a problem. But I'm saying, even when things are not going well, I think so much of this space is actually relies on repetition, consistency, never giving up. I met with someone yesterday, one of our old friends, Ledge, who was like talking about how we've been super consistent on the content side. Just like, yeah, if you look around, who's left? Like, there's actually not as many people left. Think of all the fallen people from 2021 when we came in, right? Like, there's so many people that have fallen away. And I just think of this tennis match analogy where it's like, look, you can lose a lot. You can lose the game, you can lose the set, and you can still come back and win the match. Like, you only need to win 56% of the points that you ever play to become the best tennis player of all time. And so that's like a reflection I'm kind of thinking about with trading, where it's like, if you're winning much more than that, you're doing great. And even if you're not, and you're like slightly on the wronger side of that, you've got the chance to turn that around like pretty damn fast, I think, if you can just, align certain things. So that was my problem. That was my reflection, Ledge. I want you to give us a quick take on both, and then we'll close out the show.
Yeah, absolutely. I'll do that, and then I'll actually go to Funky to close us out for the day because he had his hand up as well. That is the one point, the bet sizing, and I think that tennis analogy makes a lot of sense. The other thing that I've been thinking more time, or spending more time to think about, is like the profit goals for specific trades, because the one thing is to have your, my robotics thesis. That to me is, if this is trending and I have like some early robotics coins in my portfolio, they could run massively. They could make a very, very nice play. However, what I also started to think about is the trades that have like maybe a 20-30% upside potential. I did Coinbase, shared about like, started out as an arbitrage opportunity, ended up holding Coinbase from 170 to 230. Trade a couple other coins just with 25-30% gains over a shorter period of time. And I started to think about basically my life as what I estimate how many months I have left to live and what my monthly expenses are. Obviously very rough, and it's not like, including inflation and basically none of that. But just thinking of a trade as significant if it basically allows me to secure a runway for an additional 4 months for just putting on a trade over a couple of days and taking profits, and adding as many basically work-free months to the rest of my life. Again, this is not factoring in inflation. It's more about me trying to appreciate quote unquote smaller trades as well that just do 20%. And I know, and I say it all the time, stock market, yada, 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 typically does 9% a year. So 20% in a trade is still a lot. But that on top of the bet sizing is also to have bets that I clearly categorize as, this is a small swing trade. I want to take profits and I'm happy with 20%, but this is also a thesis for a different trade. I'm like, if this runs well, that could do a 10, a 20, a 30x. Very curious to hear Funky's thoughts on our portfolio conversation so far, and then we have to close out for the day.
I love the conversation in general. I like the way that you guys are just openly talking about this. I think it's very helpful for all the listeners. And actually, I had looked up the quote that B already said. It's basically, I won 80% of the matches with only 54% of the points. But I did find another great quote, which I think is a great way to cap off the show. When you're playing a point, it has to be the most important thing in the world. And it is. But when it's behind you, it's behind you. And this is just like, crypto. You're going to take some lumps, right? And you just move on and you find the next thing. You find the next trade. You just, succeed. And, whether it's a win or loss, you just got to move on. So great show today, guys.
And that's actually on the negative side where you really have to move on. It's actually on the positive side as well. Like, you say you do the trade, the legendary mentioned, you take your 30% and the thing rips 3,000%. Like, there are people who I've read like stories. I don't know if these coin fashion stories are like real or not, or just like laughing, but there are people who get like really caught up in the things that they could have won had they not sold, even if they took a profit. So like, it's not, you got to let the things go even when you win. Like, it's about letting things go, treating things with like the utmost respect when you're in them and doing them, and then letting them go on the positive and the negative side. And I actually think that's like one of the top reasons. This is me personally. If you were to ask me if something rips after I sold it, I never ever. I don't know. It's just my personality. Never ever do the calculation. Like, what would this have been if I held? I'd never know the answer to that question. I might look at the price and be like, oh, it's got to a particular price, but I will never do the calculation. I'm actually legit not even interested. So that's a final reflection as we close
I
out.
wish I could do that, but my brain is wired that I'm obsessive about doing like math and calculating stuff. Like when I see numbers, I count stuff. When there's stuff to count, I do math. And yeah, even if I try to ignore that, when I just see the number, my head will automatically do the math on that. Maybe I am, as Diablito is saying in the comments, maybe I am a computer.
Yes, I think you are a little bit, to be fair, and that's useful. It's useful to have a computer in the room as well. Okay, all right, guys, that's a good show. Enjoyed that conversation. Hope you did too. That's it for the week. We're going to be back again with you Monday. Just a reminder, if you are new here, if you're just discovering this show because you've been under a rock for a long time, this is our 500 and God knows what number episode. We do it every single day, Monday to Friday, 7 a.m. Eastern time on X Video, YouTube, Apple, Spotify, and all of the other people apart from you potentially have been here for all of those episodes. So you want to join the crew. We're here every single day, Monday to Friday. Have a wonderful weekend. Take care. We will see you on Monday. Bye-bye.